All right, welcome guys. This is Brocco with Uncharted Territory. This is the start of a new little series me and TSDR wanted to do where we do a little bit of a post-market recap at the end of each day. Me and him will probably take turns day to day on who runs it. We are both on the live trading Zoom all day together, so we generally, have the same thoughts on the market. This will be posted in Discord, on YouTube, on Twitter, for everyone to see for free. We're kind of just going to cover, what we talked about in the pre-market stream, which was live on YouTube this morning and will be live on YouTube and Twitter for the rest of the week for those that are interested in joining up. And then we're kind of just going to cover some notable movers, some highlights for the day, take a look at how some things closed, and then maybe a little look ahead into tomorrow and the rest of the week. So don't want to keep these too long. Ideally, 10 to 15 minutes max, just kind of cover the important stuff. But pretty big move today. NASDAQ closed up 2.2%, S&P up 1.5%. Gap City coming into the day, right? Gap City is never fun when you get these big overnight gap ups. Takes away a lot of the potential intraday range for us traders. Not to mention big gap ups on Mondays have not been very great. Followed through pretty well today, but just in general, definitely some of those tougher days to try to get exposure. Obviously, if you loaded the boat on Friday, you're pretty happy today, but really big gap today. NASDAQ gapped up about 1.5%, which is more than its full ATR. So definitely not easy. TSDR shared a pretty good graphic with the group this morning, which he typically does when we get these gap reversals versus the intermediate term trend. This is from Brian Shannon. You can check him out on Twitter. His handle is right here at Alpha Trends. He just posts some phenomenal content. And this is a study he did a while back on gap reversals against the intermediate trend. And I highly recommend, screenshotting this and saving it for the future when we do get a similar situation like this, like we did today. So some notes on this, right? The bigger the gap, the greater the likelihood the market will close near the high of the day. A midday shakeout below VWAP is very common. It sucks in the shorts before it recaptures VWAP and closes near or at the highs. Larger gaps higher in the overall market, especially after a 3 to 7 day decline, tend to fall through to the upside. Gaps above a flattening or slightly increasing 5-day moving average often turn the intermediate term trend back up, and prices continue in the direction of the gap for a few days. So here's a little graphic he provided of what that may look like. Right here, your black line is your 5-day moving average, which is declining as the intermediate term trend has been down for whether it be 3, 5, 7 days. This is Friday's close in our case right now, your prior day close, and then you get the big gap up overnight like we got today. And this is just a basic graphic of what to look for when you get that big overnight gap against the intermediate term trend. The red line is your volume weighted average price for the day, your VWAP, and then this black line is price. So you can see we get a nice move up in the morning off the gap, break back below the VWAP, make new lows on the day. Then the market starts to base out a little bit, recaptures the VWAP, makes new highs on the day, and sort of just trends into the close. Now, this is a pretty perfect graphic of what happened today, to be honest. We gapped up, pushed a little bit at the open, came down through the VWAP, made new lows in the day, started to base out, reclaimed the VWAP, made new highs, and trended into the close. I mean, almost perfect. He nailed it with that graphic, right? That's exactly what we got today. And, that's a good graphic to have and, good to know because really right here, this spot when we took out the VWAP and then reclaimed is really your only good spot to try to get some exposure or take some positions today without feeling like you're completely chasing the market on the gap up, right? Whether some names on your watch list are, backfilling a little more of this gap, maybe even filling the gap or pulling back to some support, or some names on your watch list are showing some relative strength and taking out the opening range highs as the Qs kind of base here and recapture the VWAP. That could be a really nice spot to try to get some entries on some things, once again, without feeling like you're really chasing on a day like today. Which it sort of always will. But that's a really nice just graphic and study from Brian Shannon, just whether it be, to not short the market on a day like today with these notes, or if you're just trying to find some, low risk entries to try to get some exposure, back in the market after that shakeout last week. So yeah, that graphic was awesome. TSDR sent that out early this morning. He usually likes to remind us of that when we get, a setup like this. One thing I do want to mention that I brought up in the pre-market stream that I thought was important, I included this in the Sunday Scans newsletter. I also posted it on Twitter yesterday evening. This is a graphic of the SPX daily chart year to date. I have kept track of the CBOE put call ratio for some time now in my Google Sheets market health tracker I have, but I thought this was pretty notable over the weekend. So the CBOE put call ratio is basically just a number that's calculated by the number of puts traded versus calls traded on any given day. And anytime that gets over 1.0, meaning more puts are traded than calls, typically that's very reliable in marking a short-term low within an uptrend. You could see these three green arrows are the last three times that the put call ratio closed over 1.0. This most recent one being Friday. On Friday, the put call ratio closed at 1.08. You can see this isn't very accurate in like a deeper, more violent correction like we saw in April. Obviously, that's going to be all over the place, but when you're in an uptrend above a rising 50-day, this can be very accurate at marking short-term lows. And with that closing at 1.08 on Friday, despite the S&P reversing and closing green, I kind of brought that up as a good signal today that, there likely is going to be a steady bid on the market, just because, that 1.08 put call ratio to me says that coming into today, especially on the big gap up on the QQQ, that there's going to be a lot of offsides positioning, whether that may be anyone trying to, chase the market higher and, get some exposure back after, selling out of what they had Thursday and Friday last week, whether it's shorts having to cover up positions, they got short the market and now they're offsides into today. The bigger the gap, the more offsides that positioning is, and the more likelihood the market is going to hold up and have a steady bid for most of the day. And that kind of paired in well with that Brian Shannon graphic of the gap against the intermediate term trend. So those two together kind of gave us a bullish bias for the day. And, still wasn't very easy to get a lot of positions in or get a lot of exposure on, but it definitely helped just to, as a general guide of what things may look like for today. This morning, the advanced decline actually sold off a good bit. This sold off about 1,000 points at the open. The indexes did hold up pretty well, SPY and Qs specifically, but under the hood, there was some, profit taking on some stocks in the morning. But, by the end of the day, this pretty much recovered most of the move and got back to right around where it opened. So that was nice to see. Had a little bit of underlying weakness that, kind of came back near the end of the day. One other thing I wanted to talk about is kind of just this really wide range on the Qs. So I think NQ futures are up about 1,000 points from Friday's low, that's a really big 2-day swing. That's about 4.5% on the market in just 2 sessions. Really only like 1 session and a half because half of those points came on the reversal midday into the close. So when you see really wide swings in such a short period of time like that, doesn't necessarily feel like a healthy market right now. Really wide swings like that represent to me like a lot of emotion in the price action, which isn't necessarily a good sign. A lot of emotional participants, really fast up and down swings in the market the last week or so. It's definitely a time to be a little bit more careful with your decisions, right? We're not, this is a lot different than say the 50-day hold back in September, which I had another post on today on my Twitter if you want to go check that out. Much less volatility, much less range back then. You just had pretty much a 6% pullback in 5 days, followed by a 4.5% recovery in a day and a half. You really want to see some of that volatility and that range kind of contract and come down, and just for the price action and participants to calm down a little bit, because without that, it's you're going to have some. It's going to be pretty tough to manage positions and try to get exposure and just have some clean chart setups, right? It's going to be difficult when you have volatility and range like that. So really what you want to see from here is for the market in general just to calm down a little bit, get some volatility contraction. Really strong close today. I mean, if you look at stuff like the IWM and the Dow Jones, these pulled back in the morning, RSP, and recovered all the way into the close. Most stocks did as well. So it's going to be, it's going to be interesting to me. I could see us getting some continuation tomorrow. The quicker we do rip up without consolidating, I think the more vulnerable we are to, a nasty bar somewhere at the highs here, whether it be a lower high or, at just a new high right here. it's something to be mindful of. I really wanted us to maybe backfill this gap a little bit more in the coming days and get some more like, cross back higher low action and find some more buyers for a higher low somewhere in here. But the quicker we go up, especially after such a big move in a day and a half, I think the more likely sellers, end up hitting this hard somewhere up here. So ideal scenario would just be some consolidation here. You want volatility to come down, ranges to get tighter and stuff like that. Right now, we're kind of just all over the place. Participants are very emotional, right? Stakes are high. Not really a good place to be in, right? You want things to calm down a little bit. Makes for much easier, smoother trading. So yeah, that's that. IWM today had this like kind of range breakdown that we were looking at. We actually had an interesting precedent that we looked at with the SMH versus IWM. This was SMH back in August, September, and obviously in a different part of the cycle, right? This was, after the first leg, and this was our first real base after this recovery from the lows. So this probably had a lot more power to it than IWM may have here, but it is an interesting chart comparison. You kind of have this sideways base and this maybe call it failed head and shoulders breakdown look, right? Which can be very powerful, right? Because, the biggest moves come from failed breakdowns and failed breakouts, right? So back on SMH here in September, you kind of had this head and shoulders look. We came down, we broke the 50-day and then reclaimed pretty quickly, and it was just off to the races from there. And IWM has a pretty similar look. This undercut that October bad break low today, or on Friday, sorry, reclaimed and back above the 50-day today, up 1%. Lagged the cues a little bit today, but, that's not surprising. Could this play out? I don't know. Would be awesome to trade. To get some of that risk on kind of sentiment back in the market. But really nice failed breakdown or reclaim of the 50-day. That's really nice. You really haven't seen this all-time high breakout on IWM fall through that much yet. This 245 is kind of the big level. We've had some trouble for a few weeks, but, pretty nice start to the week so far. We'll see what else this has in store. One notable group that, or, not group, but theme that was really strong today was these, recent earnings gappers. Whether it be, names that gapped up on earnings and had really solid day two follow through, or names that gapped up on earnings kind of early, middle of the week last week and, just went sideways for a couple of days because the, broad market was selling off. We called those, delayed earnings reactions. And it's a setup that we, talked about briefly today on Zoom, and I started doing a study on. An example, of some previous precedents. First one that comes to mind is this HIMS back here, where you get this gap up on a PR, news, earnings, and then it kind of pulls back, undercuts, reclaims, and gives this kind of 2-3 day sideways pattern, and then, breaks the earnings or PR high and gets some continuation. TEM was another one earlier this year, back in August. Really similar to HIMS, you get the earnings gap up, inside bar, and then it pushes out on day three, and that can kind of provide a secondary entry. Really what you want to look for in those is like some sort of 65-minute or hourly higher lows, some contraction, a nice spot to risk off of, and you can get involved. A few names that kind of fit into that earnings basket that really outperformed today. Open, obviously this gap down about 20% on earnings on Friday. I think it was even lower in the pre-market, and actually closed green at the end of the day on Friday and saw huge continuation today, up 22%. A little bit different from the setups we just looked at, but one of those names, that got bought up on earnings and was one of the stronger movers today. SCDG, another one. This is that delayed earnings reaction. Not necessarily delayed, but it kind of gave that same multi-candle pattern where you had the big reversal on earnings, closed up about 35%, right below this 4180 kind of breakout area. And then it pulled back, put in a higher low off the 50-day moving average. Obviously, not surprised to see that pull back for 2 days as the market was pretty weak into the end of the week last week. And then this gaps up, breaks the opening range highs, and just has a big move intraday. Rivian was another one that was almost identical to SCDG, right? You get the big earnings move, kind of pulls back and consolidates as the market sells off. Market holds the 50-day moving average, recovers today, and then you just get this thing, explodes 10% on the day, trying to take out the top of this base now. SNDK, another one. This one is probably a little tougher to get into, but just undercut the earnings low, reclaimed, and just ripped. And then, day two fall through today. We'll talk about this one a little closer to the end of this recording. Unity was another one today that TSDR was watching. earnings gap up, 2-day pullback into the rising moving averages, higher low, and then, takes out the opening range highs and puts in a nice move today. Likely going to see some continuation. So you see the pattern here, right? Some of the, kind of best performing names today were some of these kind of delayed earnings reactions, or just these names that reported earnings last week and had positive reactions in general, are seeing some really nice follow through. Lyft was another one as well. Earnings on Thursday last week, inside bar on Friday, really nice relative strength, and then get some follow through today. This was also moving with that, basket of, Rivian, XPEV today as well, and some names like that. DOCN, really nice earnings continuation, gapped up on earnings Wednesday, had two, nice follow through on Thursday, inside day Friday, continuing today. Frog, another one, and plenty more. So yeah, you get the idea, right? These earnings movers have kind of been some of the hottest names, right? I mean, they have a reason to move, right? Stocks need a reason to move. They need fuel, and what is that fuel? Usually earnings and sales, news, a story, narrative, right? So these all kind of have a reason to move, and we're really standing out today, at least on my scans. Two other, just really nice positive signs to see today were, PLTR and NVIDIA, two of your liquid leaders, given that sort of beach ball action where these both kind of, were two of the weaker names on the sell-off last week. I think last week from the open, NVIDIA, down about 14%. And then PLTR had that earnings gap down, was down about 20% at the lows last week. And then just huge reversals today. I mean, Palantir is above the earnings day close, and NVIDIA up almost 6% today. So that's nice to see. That is some really, wide range and big reversals. These likely are going to need to consolidate a little bit. NVIDIA does have earnings next week, so something to keep an eye out for. But just in general, it's, was a little bit concerning to see these sell-off, PLTR sell-off and earnings hood as well. But to see this beach ball action off the lows is nice. Not necessarily something I'm going to look to trade right now, but, for overall just, market health, I think that's a pretty good sign. Two names I'm also watching this week, SNDK and CSIQ, two names that have just absolutely exploded. SNDK is kind of, in that memory theme with WDC, MU, STX. So SNDK, this is starting to get parabolic. It had its highest volume of the entire run on Friday post earnings, kind of broke this ascending channel here, and just really showing some parabolic, characteristics here. This is kind of my specialty setup. If the market is going to keep grinding up, up into the highs without much rest, that does open the door to a pretty nasty sell bar. Probably there are some sellers definitely going to be sitting up here, and the quicker we get up there without consolidation, the more likelihood we're going to kind of run out of buyers. With range this wide, and and not any ranges built out, you can get some really nasty whipsaw action. So if we were to continue up on the indexes into tomorrow and Wednesday, this SNDK would be a really big focus for a potential mean reversion parabolic short setup. Obviously this 300 level is on watch as, just a general psychological level. You got the gap today, you got range expansion, volume expansion, massive run, 500% from, that September breakout. I don't know. I think this is like 380, 400% above its 200-day moving average. So let me get it on here. Yeah, doesn't even have a 200-day yet, but it would be somewhere down here. This definitely fits all the criteria for a parabolic short. If this does gap up, ideally in a, best case scenario, you get another huge day tomorrow and then a final climax gap up on Wednesday that opens higher and closes lower. I could see it triggering tomorrow if you get a really big gap and a push over 300 and some sort of intraday parabolic move that could definitely set it up. Ideally it would line up with the indexes kind of, gapping up and running into some sellers and maybe backfilling the gap. That could help add some weakness to this. So it's kind of trading really independent from the market right now and just doing its own thing. So I'm not worried about the indexes too much when it comes to something like this, but this definitely is in play the rest of the week. CSIQ is one that could set up. Not really interested just yet. For how this name typically moves, it is pretty extended for the short term. It would definitely have to get a couple more days up into this prior supply up here for me to be interested. Not ready yet, but one of those other names that's just kind of been going vertical. More feels kind of episodic, like an episodic pivot to me, honestly, with how much volume it's trading, and how it's acting up the right side of the space. So two back-to-back highest volume ever weeks. So I'm not really interested just yet. would need to go a little more for me, but I have it kind of on the flag list just to keep an eye on it. So yeah, that was pretty much my thoughts from today. I didn't do much today personally. My trading, my trading activity was pretty light last week and pretty light to start the week as well. I mean, there's just not much to do here. Would have been nice to buy some stuff on Friday. I personally didn't get much exposure on Friday, but market will give plenty of opportunities, right? So we'll have to see how this plays out. Tomorrow's open and close will be very interesting to kind of get an idea of where we might go the rest of the week. But pretty nice action today. Hard to argue against that. We had a huge overnight gap and market held pretty well. We saw some individual names kind of flush out at the open, but most of them kind of reclaimed and climbed higher the rest of the day. So pretty good action. I think that's pretty much all I have to say for today. I don't want to keep this too long, but that was, all the notable kind of things I saw today and, what our game plan was. So pretty much the top idea right now that I have is SNDK because, this is one of my, playbook setups and it is setting up really nice. So, with the lack of kind of tight ranges and bases out there and the market, in my opinion, needing some more consolidation for these setups to be really primed, this is probably where I'll be focused. And then as well as just keeping an eye on the watch list and, how some things act the rest of the week. So really in no rush right now to force any trades. I've had some trouble getting traction the last few weeks. So, market's going to have a few couple periods each year where, all the stars align and, for your strategy or your system. And that's when you really want to push it. And other than that, it's just treading water until, that next good period arrives, right? Doing as little as possible in between those periods and, just trying to protect the equity curve, make smart decisions. And then, if I can start to get some traction on some trades, then, I'll know market might be, getting a little better for my kind of style. So, but yeah, hope you guys enjoyed. Pre-market live stream will be live on Twitter and YouTube at 9 a.m. Eastern tomorrow. We'll do live trading all day live on YouTube and Twitter on Wednesday as well, if you want to tune into that. And I'm sure TSGR will have one of these up tomorrow for you guys, for anyone who wants to listen in on the post-market recap again. So yeah, once again, thank you guys for listening and good luck the rest of the week.